Welcome to another episode of Price Targets with your host Bitcoin Jack. Welcome back, guys. It's Tuesday, and I think there's a lot to talk about this week. Yesterday was quite the day. I mean, Thursday, Friday, the weekend as well. But I think we hit our peak volatility yesterday, and things will calm down for now. Um, Today, I want to talk about whether tariffs are the main reason we are seeing this pain, or is there maybe something more behind the headlines? I'm probably a bit out of my depth here, but I do have some ideas, and this is, generally how I approach the market. I will come and look at things and then use common sense and stuff to basically make things rhyme in my head, and then try and find answers to whatever holes I can poke in my own story. I think what I want to do is look at a few fractals and a few historic moments, 1929, 1970s, the 2000s. We're definitely gonna look at the SPX short term, and still the gravity that I expect towards August, anchored toward August, and probably should talk about the dollar strength, or weakness amidst the basically currency war and debt wars, and everything financial is being kind of weaponized right now. Um, and we've seen some relative Bitcoin strength, and I want to shine my light on whether I think that's gonna hold up or how we're gonna balance that out, right? So I think that's the main few topics. We'll ask you guys on Twitter if you had any ideas to any questions that you want answered, so we'll go over that as well. And I think that's pretty much it. So to cut it short, this is Backpack. I've been trading here, and exploring the exchange for a couple of weeks now, and I'm pretty impressed with what they've built. They basically have the FTX engine where everything is cross collateralized. I can basically own Bitcoin and then use that as collateral to long the ETH perp, which in the back of the engine, it's gonna lend USDC to long that perp, right? So that's just a very capital efficient, equity efficient, really cool thing. And as part of their launch, they will be doing seasons and to score points, and these points are gonna be rewarded in some kind of way. We don't really know. Each week we have points that are rewarded based on essentially secret metrics. We score points over time, and maybe in the future they will be rewarded with airdrops, or who knows, maybe there's going to be a token. But if you're early here, it's probably cool to come and join. There's ranks to it, and essentially earn points. You get weekly drops, and then the order of how you score is bronze, silver, gold, platinum, diamond, and challenger. I'm a challenger, and we're gonna farm so many points. Don't even have to trade like a shitload of volume to get a lot of points, but you just have to be active and do stuff on the exchange, get referrals, etc. And I don't know. We'll see what it brings to us. It's a really cool exchange. I think they will be a top three once they open up to the European Union, which I think is going to be soon, but I don't have any exact date. So that's a big shout out to Backpack. And if you are going to join Backpack, please use my referral, because that's kind of the deal here. Without further ado, let's jump into some things crypto and broader markets. I'm confused whether tariffs are the main reason we're seeing this pain, because generally, I don't know if you follow like Husman. I'll put it in the description. But he's a quantitative analyst that's done some really cool work in the past. And if we look at the cycle of the S&P 500, we can safely assume that in 1929 we broke the old cycle, right? There was a channel here. I can probably copy that more or less. You see, there was a channel here. We kind of swooped it to the upside, broke through it, and then came crashing down through it. And from that point on, we started a new channel basically, which is this one. And this is the Saturn cycle against Saturn versus the S&P 500. And if you study it, you'll find that there is some very convincing lows in this chart that put in major lows on the asset, right? There's a high here, and then we come crashing down here, and then basically after this low in after the World War II, we started to go on this ascent, and then once we saw it come back down here again, it kind of put in a bottom again for the next cyclical bull, and then again here in 2000 2008 to kind of go on to another bull. So we're late stage in this thing, and you know, whether it's over now or whether it's going to be over in a few years, that's incredibly difficult to predict. But the downturn we're currently experiencing is based upon this little, you know, this little high here, and it's going to put us into July, August, September for a bottom, after which there may or may not be any relief. You know, like there's been times in the past where this phase of the market where Saturn went bullish again, like late stage, it did give us a little bit of a, you know, a little bit of a push, but it kind of marked the top in 60, 68, 69 to start the 70s stagflation. So I don't know the answer to that. What I do know though is that this has been a reason for me to be defensive on the S&P 500 and equities in general and the economy in general. And we're seeing people use tariffs as an excuse for why credit and everything else is very brittle. But there's a good chance that these headlines are just noise, and that the underlying system has been, you know, fragile. We know that there's been allegations of metrics not being completely fair, metrics being fabricated under the Biden administration. And it's interesting because this is a chart where we have, let's say it's a central bank's balance sheet, but then globally and then expressed in dollar terms. And we have an indicator here at the bottom which kind of gives us a score on some kind of correlation between the two, and anything above zero is they're positively correlated, and anything below zero is negatively, like, inverse correlated. And you can see how these lines move. This is the S&P 500 in red, and this is the balance sheet together. And you can see how these kind of like move together, right? And there's these moments where they kind of decorrelated in the past, like for example in 2008, which signaled stress, right? So it holds up, and then you have COVID here. You see all these balance sheets skyrocket, and then they start selling, like they start shrinking the balance sheet, but somehow there is a bunch of money that kept on flowing into the S&P 500. So they completely decorrelated. There's a 15-year or longer correlation here that kind of broke, which indicates, generally should indicate stress in the market. We've seen it yesterday with the yields that are supposed to, you know, go down because people are buying long-term treasuries. But what we're seeing is that people are having to sell off long-term treasuries at a rate higher than the demand for it. So no. I think this signals stress, and then if you look at like credit stress, you kind of see it spiking right now. So I don't know. This kind of indicates to me that there might be bigger picture problem here, and I mean, before we jump into the correlations, like 2029, 70s, 2000s, the 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 rate at which we kind of completed this. So this is the chart S&P 500 that we talked about for the last couple of weeks. I wasn't expecting this to hit here like this fast. This is just, a couple of trading sessions. Um, I was expecting a complacency shoulder off this low here, that we would go sideways, and then during summer when liquidity dries, everyone sells in May and goes away, blah 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 blah, and we come back in August, we buy the dip, and we have a nice end of year rally. That was kind of my assumption here. That would line up with the little hiccup here, and then the low here in the latter quarters of the year, and we completely I think this is like one of the largest moves, 3-day moves that we've seen in history, like top 15 or something. I've seen some charts floating around, so that's incredible. That's incredible. So it kind of completely changes my outlook. Yeah, I'm not gonna jump into this chart, but I'll come back to it like next next week because I want to see what's gonna happen here. Um, but essentially, I do think this speeds up things, right? So the complacency shoulder that I was talking about is still going to happen. Um, so these levels were hit. Maybe we come down here sooner or later. We probably rally and then come back down, rally upwards, hit these levels. This becomes the complacency shoulder, and then eventually sell off lower. Because that's just, unless tariffs are going to go away, but I do not think that tariffs are going to go away, and they're the trigger for this thing to kind of sell off. And then there's a lot of issues and problems underneath the hood. And I'll do my best to kind of dive into it deeper and deeper in the coming weeks to kind of understand how the plumbing of the system works. It's complex, so I don't know. Let's dive into a few comparisons that we can make. Let's start off with late stage. Oh God. Well, someone's ringing the door. Not gonna open that. This is more important. Late stage 2000, which as shown here is very comparative to where we are right now in terms of the Saturn cycle, has a little bit of a similar structure where we've had a big sell-off here in 98, and then we had a rally with a small consolidation into like a rounded top, right? Need to kind of remove these. In my opinion, the fractal that's comparable here is the 2020 sell-off into the rally consolidation here into a rounded top here. That's one. So that would be very brutal and would bring you back into the red zone back down here. That's kind of like not a beautiful scenario. And the other scenario that's also very possible is that we're kind of here. This is comparable. 62 is comparable with the sell-off, the COVID sell-off. And then we have the rally kind of around the top here, but like more of a consolidation, and then another rally and around the top, right? So to compare that, you essentially come down and test this part of the S&P 500. And those are like very bad scenarios. The good scenario here is that there's nothing broken and we're not in any way, shape, or form coming down of an extremely overvalued S&P 500, which I think we are. And we kind of survived this. We don't have this complacency shoulder that I talked about, and we don't have the August sell-off, or like, Q3 sell-off, Q4 sell-off into whatever we're going to see from there. And we managed to kind of find strength before and make new highs. I don't think that's going to happen. I do think that we're going to see that complacency shoulder and then, see another leg down into this area here. Okay. I think that just seems very likely to me. 1929. Well, I'm not even gonna look at 1929. But the comparison with 1929 would be that we pretty much stopped the printers, and the Federal Reserve screws over Trump by not reacting, and Trump keeps on going and bluffing into tightening global trade, and nobody backs up, and we're just we're going full on, like, tight as fuck, tighter than tight, just like happened in 1929. And honestly, 1929 wasn't caused this necessarily by tariffs, but it was caused by essentially very extreme tightening of monetary policy after a very loose period of monetary policy, which, you could argue that's been the case for the last 15, 16, 17 years. So, there's similarities here in the fact that it's 100 years ago, pretty much 100 years ago, and that these monetary cycles tend to be, 90 years, indicates that we do have a battle for reserve currency status, and that we do have a battle for, that the monetary global system as we know it is changing. And that brings us to Bitcoin, because Bitcoin was kind of born into, the last leg of this, in my opinion, overextended cycle, which may even extend a few more years, who knows. But Bitcoin was invented for that, and we're seeing that currently, within all the uncertainty, that gold is, being very much preferred. And that is because gold is, physical, and is going to retain its value, whereas long-term debt is losing a lot of value, and nobody knows whether any country in this world is going to honor their obligations on the debt. So the uncertainty shows that it's logical to own, for example, gold, and I think Bitcoin fits into that narrative as well, although we're much more correlated to the S&P 500. And that's probably because gold's probably appreciating so much because we don't really know exactly where, if all the gold that we claim that we have is actually there. And if that's not the case, then everyone's scrambling to get a piece of the pie and, exchange their paper gold into physical gold. And then at some point, that gold is not going to be there anymore. So supply dries up, and you have like this inverse capitulation on gold that we're seeing. That brings us to Bitcoin. We're tightly correlated in a way. At some points, there's been these decorrelations, right? So essentially here we're seeing that the S&P 500 just, carried on without us, without Bitcoin, and Bitcoin just kept on going down, and then Bitcoin caught up. So, and at this point we're seeing that we're kind of caught up now on the downside, and we're seeing that the S&P 500 is kind of coming back up, and that kind of gives me the impression that the S&P 500 can go do its shoulder thing here, kind of retrace a little bit, and at the same time, Bitcoin can, you know, stay fixed within its kind of downtrend, because that's generally what the S&P, what I'm expecting the S&P to do as well, except that it's just going to do a counter trend rally. And during that like harsh sell-off here, Bitcoin kind of showed its own strength. So I think they're just making a different pattern, and both are consolidating. Bitcoin stayed higher earlier and is going to go lower now. So the way I'm going to play Bitcoin right now is, let's see if I can find. Yeah. So, I mean, we've traded a lot above here, and we're now below the 82 level here. If this is kind of like a wedge that we're following and the trend is following, you know, it would pay to kind of see whether it's worth to get a hedge up here if we can get there. Currently, we're being rejected already of this block, but I do think like if the S&P 500 is going to rally, it's got to show a little bit of strength, right? And then generally, I wouldn't be surprised to see some kind of like weakness into this level. So as the S&P 500s rally, I do think there's a good chance that we have a bit of crypto weakness, and that's probably gonna be where we all get depressed. But maybe that's a point where we can have some altcoins actually follow the S&P 500, and then Bitcoin underperform and underwhelm, because altcoins have been selling off extremely well. So maybe the S&P 500 strength that we're going to see over the next week or 2 weeks, 3 weeks, could help us to see some altcoin strength, right? This was well something we talked about last week. ETH, I'm still long, but I had to trade around the weakness, of course, in dollar terms. So I've closed my my shorts that hedged my ETH positions by covering, let's see, not here, this one, by covering Bitcoin. I shared this on Twitter. I covered around the 1.144 level on the Fibonacci here, and you see it here. I drew it here as well. I do think that we might be able to kind of come up to 82, 84, maybe even like trap a few people again above the trend line, and then continue consolidating. In the larger picture, we've been looking at, you know, these couple of fractals in the past. I've shared these fractals on Bitcoin, and I've gathered these from historic moments, and I drew them here like this, just to have like a general understanding of how in the past we've seen Bitcoin react around these kind of typical levels. And if you take the average of it, it's basically the blue line, and we're, you know, seemingly following it. So doesn't need to get much heavier. This might just be it, and we just consolidate, go PvP, trap a few people, and then consolidate into May. May is going to be important, because that's a point in time where we do see some refinancing of the US debt. The next moment they will have to refinance is going to be in August. So there might be some pressure release on the S&P 500 once we get past May, because after that there's another few months before there's going to be refinancing. So I don't say that what Trump is doing necessarily is because he wants to refinance at lower rates or at cheaper valuations. I don't know exactly. Like, there's a lot of stories and rumors going and floating around on what's exactly going on. I don't claim to know what the hell is going on. I'm not entirely out of my depth here, but there's so many different things moving that it's kind of really hard to say. And this is very impressive or historic. So, and then the other thing, then this is just my general expectation on the dollar. Let's just grab the dollar index. It's confusing to me that the general expectation is that the dollar is going to keep losing strength, because as it stands right now, the Federal Reserve seemed to be reluctant on in terms of opening the printer press and kind of giving Trump what he wants. Fink is even saying like, oh, maybe we have to hike, and I'm like, wait a minute, that's weird, because at the other moment he says like, okay, well, I think that everyone I'm talking to, all the CEOs, they're saying like, oh, I think we're already in a recession. So he's basically saying like that the Fed might hike into a recession, which is a very strange thing. Generally, that's not how it works. And at the same time, the EU is going to borrow like madmen, and China is reacting to the tariffs by printing. So it just doesn't make sense that this is going to resolve to the downside, which is going to again put pressure on equities. And Trump has said it last week, like, forget markets for a second. So I don't know what the angle is exactly here, what he's doing. I think there's one big reason what he's doing is because he just generally thinks it's important to reshore all the industry. If you're going to have a cold war, or eventually a hot war, you want to have all these things on shore, and you want to not be reliant on your nemesis, China. And question mark here is like whether China is gonna start invading Taiwan as a retaliation to all the big talk, because at some point, Trump's saying, I'm gonna raise tariffs, and then China's like, well, I'm gonna raise even more, and then Trump's like, well, I'm gonna raise you, and I'm always gonna raise you by one, so um they can't keep doing that forever. There's someone is gonna have to like change the strategy and see what's gonna happen. Either someone needs to bow down, or someone has to do something that the other party didn't expect or doesn't know how to react to, which changes the whole game. So we'll see. I'm gonna leave it at that. That was a pretty long video, and I don't know whether that's kind of like useful, but it's my thoughts, and I think there was some value in here. Again, shout out to Backpack. They I think they're going to be a big exchange. If you want to try them out, use my referral link. And guys, I will see you next week. Stay cool, and I think there's going to be some upside in the days to come, and let's try and capitalize on it. So guys, cheers. Girls, cheers. Everyone else, cheers. See you soon. Bye.